Hey everyone, welcome to the most straightforward guide to forex trading you would ever watch. I am your Forex, and whether you are completely new to trading or already have some experience, this video will give you everything you need to understand forex trading the right way. Think of this as your complete roadmap, from understanding what forex actually is all the way to making your first trades safely and smartly. No confusing jargons, just clear explanations that make sense. But first, let's talk about what forex actually is. What is forex? Forex, short for foreign exchange, is like a giant worldwide garage sale for currencies. Imagine you are at an airport exchanging your dollars for euros before a European vacation. Forex trading is essentially doing that, but online, really fast, and with the aim of making a profit. Here is how it works in simple terms. You are always trading one currency for another. The goal is to buy a currency when it's cheap and sell it when it's worth more. The market is open 24 hours a day, 5 days a week, because there is always a financial center open somewhere in the world. Now you might be thinking, sounds great, but how do I get started? Well, that's exactly what you are going to learn in this video. By the end of this video, you would understand the basics of forex. We will cover major currency pairs, how to read those wavy charts, and what all those fancy terms like pips and lots actually mean. 2. You will understand how to get started. I'll walk you through choosing a broker and setting up your first practice account. Don't worry, we will use a demo account. 3. You will understand simple but powerful trading strategies. You will learn how to spot trends, understand support and resistance. It's easier than you think, and use simple tools to make smarter trades. 4. You will understand the secret sauce, risk management. This is what separates successful traders from those who flame out. You will learn how to protect your money even when trades go wrong. 5. You would understand the psychology of trading. I'll share mind tricks to help you stay cool under pressure and avoid common emotional pitfalls. Let's start with the building blocks of forex. Currency pairs. Currency pairs are like dance partners. The US dollar might dance with the euro, or the Japanese yen, or the British pound. These dance partners are written like this: Euro/USD, USD/JPY, or GBP/USD. The first currency listed is called the base currency, and the second currency is the quote currency. Now let's talk about how these pairs move. Imagine the Euro-USD pair is like a seesaw. When one side goes up, the other goes down. If Euro-USD goes from 1.1000 to 1.1001, it means the euro just got a tiny bit stronger compared to the dollar. That tiny move, we call it a pip. It is the smallest step a currency pair can take. One pip might not sound like much, but when you're trading big amounts, those little steps can add up to big profits or losses. Speaking of big amounts, let's talk about lots. In forex, we don't just trade €1 or $1 at a time. We trade in lots. A standard lot is 100,000 units of a currency. Don't panic. You don't need to have 100,000 euros in your account to trade. So this is where leverage comes in. Leverage is like a power up in a video game. It allows you to control more money than you actually have. For example, with 100-to-1 leverage, you can control a $100,000 worth of currency with just a $1,000 in your account. Sounds great, right? Well, yes and no. Leverage can multiply your profits and can also multiply your losses. We will talk more about it on how to use it safely. Now, let's look at how we track all these currency movements on the chart. Charts are like the crystal balls of forex trading. They show us how a currency pair has been behaving. We have 1. Line charts, the simplest type, showing a single line of price movement. 2. Bar charts. Each bar shows the opening price, highest price, lowest price, and closing price for a specific time period. 3. Candlestick charts, similar to bar charts but with a body that shows whether the price went up, usually in green color, or down, usually in a red color. Don't worry if this seems overwhelming. We will practice reading these charts together later on. Alright, now that we have covered the basics, let's get you set up to start practicing. First, you need to choose a broker. Think of a broker as your gateway to the forex market, and here's what to look out for. 1. Regulation. Make sure they are overseen by a reputable financial authority. 2. Low fees. Look for tight spreads, which is the difference between the buy and the sell price. 3. User-friendly platform. You want something easy to navigate. 4. Good customer support, because you will probably have questions along the way. Now for the fun part, actually making trades, we will cover 3 simple but powerful strategies. 1. Trend following. Remember surfing. This is like riding a wave. You identify the overall direction of price movement and go with it. 2. Support and resistance. Remember our bouncing ball analogy. We look for price levels where the currency pair seems to bounce off repeatedly. 3. Moving average crossover. This involves using 2 moving average lines. When the shorter term line crosses above the longer term line, it might be time to buy. When it crosses below, it might be time to sell. Now let's talk about risk management. This is where most beginners go wrong, so please listen closely. Good risk management is like wearing a seatbelt whilst driving. It might feel restrictive, but it could save you from disaster. Key rules. 1. Never risk more than 1 to 2% of your account on a single trade. 2. Always use stop loss orders. These automatically close your trade if the price moves too far against you. 3. Aim for a positive risk reward ratio. If you are risking $10, aim to potentially make at least $20. Trading isn't just about numbers and charts. It is also about managing your emotions. Fear and greed are your biggest enemies. Here are some tips for managing your emotional balance. 1. Stick to your trading plan. 2. Don't chase losses. If you have a bad day, step away and come back fresh. 3. Celebrate your successes, but don't get overconfident. 4. Keep a trading journal to track your progress and learn from your mistakes. And there you have it. You have just learned the fundamentals of forex trading. Remember, this is just the beginning. Keep practicing with your demo accounts, keep learning, and most importantly, be patient with yourself. If you found this guide helpful, please hit that like button and subscribe for weekly trading tips. Don't forget to join our community on Telegram to get access and download our free forex cheat sheet. Link in the description below. Trading isn't easy, but with the right knowledge and mindset, it can be incredibly rewarding. Stay curious, stay cautious, and I'll see you in the markets.